So now I'm going to explain you second problem from valuation of goodwill, which is very important, and such type of methods and concepts definitely they are going to ask in the your semester exam. So yeah, the balance sheet of Satish Company Limited disclosed the following position as on 31st March 2010. Here they gave the balance sheet, liabilities and assets. Paid up capital is 6 lakhs, capital reserve 1,20,000, profit and loss account 52,000, sundry creditors 1,42,000, provision for taxation 1,10,000. Next, coming to the asset side, land and building 4,10,000, plant and machinery 1,80,000, stock 2,30,000, sundry debtors 1,90,000, cash 14,000. Under balance sheet, they gave the extra information as well. The reasonable rate of return is 12%, which is normal rate of return. Okay, reasonable rate of return, normal rate of return are one and the same. Don't be confused. Next one is rate of income tax may be taken at 50%. This concept is something new comparing to the previous problem which I explained. The third one is what? Goodwill. Goodwill should be valued on the basis of 3 years. How many years we need to calculate the goodwill? 3 years on super profit. So yeah, let's get into the solution. So in this problem, what I said you, this rate of income tax may be taken at 50% is given. No, this is something new comparing to the previous problem as I said you just now. So yeah, we'll do the first step. Okay, solution. So step 1, average profit. Okay, if you observe, like previous problem, they have not given average profit value directly in the question. Okay, and as I said you, if average profit value is not directly given in the question, at that time they will mention this way. Okay, this way they used to give in the question, like previous year profits value they used to give, from which we need to find out whether it is a simple average profit method and or weighted average profit method, and we need to convert those into the formulas and we will get the average profit value. Okay, but this way also they have not given in the question. Yes, there is nothing, previous year profits values also not given in the question. At that time, how we need to find out average profit means there is a formula for this as well. What is that formula? Means profit is equal to profit before tax minus tax is equal to profit after tax. Okay, this is the formula in which here profit before tax will come here, profit before tax will come left now, is equal to profit after tax, this minus is going to be plus tax. Okay, profit before tax is equal to profit after tax plus tax. Here in the question, in the second point, if you observe, rate of income tax may be taken at how much they said? 50%. No, so this 50% is going to be applied for profit after tax, and for tax also the same 50% is going to be applied. Clear? Now here tax value is how much percentage we get to know. Yes, it is given in the adjustment, which is 50%. So 50% we assumed it as a profit after tax, and the remaining tax will be 50%. Then we need to know the value also, right? So from where we need to take the value means here provision for taxation at liability side they gave the value 1,10,000, right? So this 1,10,000 will be profit after tax, 0.5%, and the remaining 0.5% also 1,10,000. It means what? Same figure we need to take twice. Why? Because this is 50%, 50%. No, 50% means 1,10,000 means the remaining 15% also 1,10,000 only. So what is the figure of add both of these? How much we will get the figure? 1 lakh, 2 lakhs, 20,000. So 2,20,000. This 2,20,000 is nothing but average profit. Okay, so this is how we need to find out average profit. If they won't mention any information related to simple average profit method and weighted average profit method, at that time we need to find out the average profit with the help of this formula. Okay, now step 1 is completed. Now coming to the step 2. Step 2 is what? Capital employed. For capital employed, we need to draw the pro forma. Particulars amount. Okay, what is the formula of capital employed? Assets minus liabilities, right? So first of all we need to write assets. Okay, now we will go to the question. Yes, from these assets, what we need to take, what are the assets we need to record in capital employed means land and building we need to take, plant and machinery we need to take, stock we need to take, sundry debtors also we need to take, and cash also we need to take. In here all the assets we need to take. Yes, preliminary expenses is not given, goodwill also not given. Preliminary expenses, goodwill we should not take in capital employed. So it is already not given in the question, so no issues. Yes, these are the assets which we need to take in the capital employed. So I am taking one by one now. The first one is what? Land and building. Land and building. How much? 4,10,000. Next one is plant and machinery. Value is 1,80,000. Next one is stock. Stock value is 2,30,000. Sundry debtors. Sundry debtor value is 1,90,000, and the last one is cash. Cash value is 14,000. Now we need to do the total of all these assets. So assets A. Now 4,10,000 plus 1,80,000 plus 2,30,000 plus 1,90,000 plus 14,000. So 10,24,000 is the total assets value. So 10,24,000. Now in the same way we need to write the liabilities as well. Now look at the question. What are the liabilities we need to take? Means paid up capital we should not record in the capital employed. Capital reserve also we should not record. Profit and loss account we need to take, but we need to take at the last, not in the liabilities. Okay, next sundry creditors we need to take, and provision for taxation also we need to record in liabilities side. Okay, so these two we need to record. I am writing here sundry creditors 1,42,000 and provision for taxation. What is the value? 1,10,000. 1,10,000. Now do the total of these liabilities. Liabilities B. Okay, so 1,42,000 plus 1,10,000. 2,52,000. 2,52,000. Okay, now what we need to do here? What we need to write? Capital employed A minus B. Okay, A minus B is nothing but assets minus liabilities. So what is the value of assets? 10,24,000, and the liabilities value is 2,52,000. Okay, minus. So 10,24,000 minus 2,52,000. 7,72,000. 7,72,000. As I said you, actually our problem ends here it seems. If at all in balance sheet profit and loss account is given, at that time we need to add the extra step. I said you, what is that extra step? Less half of the current year profit. Actually, what is the current year profit? Profit and loss account. This 52,000 is there, no? Actually, this is current year profit. But here, if average profit is done on tax, okay, if average profit is done on tax, at that time half of the current year profit also we need to take a tax value only, that is 1,10,000. What is that? It means what? Instead of profit and loss account 52,000, we need to take provision for taxation value 1,10,000 which is there, no? This figure we need to take as half of the current year profit. So here I am writing 1,10,000. okay, 1,10,000 into 1 divided by 2. How much we will get? 55,000 we will get as half of the current year profit. Now what we need to do? Minus capital employed minus half of the current year profit. So 7,72,000 minus 7,72,000 minus 55,000. So the figure is 7,17,000. 7,17,000. This 7,17,000 is nothing but average capital employed. Okay. This is the capital employed answer. Okay. Now step 2 is completed. Now we will do step 3. What is step 3? Step 3 is normal profit. What is the formula of normal profit, ma? Capital employed into normal rate of return divided by 100. So capital employed into normal rate of return, I am writing in shortcut, divided by 100. So capital employed value, how much we got? 7,17,000. No. So the same 7,17,000 I am taking here. 7,17,000 into normal rate of return percentage. How much we got? How much given in the question? The reasonable rate of return is 12%. So 12% they gave, no? The same 12% we need to take here as normal rate of return. 12 divided by 100. Now take the calculator. 7,17,000 into 12 divided by 100. So the value is 86,040. So 86,040 is normal profit value. Step 3 is completed. Next step 4. What is step 4? Coming to step 4, expected profit. Average profit value, how much we got here? 2,20,000, right? So I wrote here 2,20,000, from which we need to deduct remuneration, tax, investment and salaries. Remuneration is not given in the adjustment. Investment also not given in the adjustment, and salaries also not given in the adjustment. But tax is given in the adjustment. Yes, here you can see in the question, rate of income tax may be taken at 50%. So here they mentioned 50%. Okay, value is not there. Then from where we need to take the value? Means here in the balance sheet liability side down you can see provision for taxation. Okay, what is the figure here? 1,10,000. So this same 1,10,000 we need to write here. So 1,10,000 I wrote here. 2,20,000 minus 1,10,000, we will get 1,10,000. This 1,10,000 is nothing but expected profit answer. Now coming to step 5, super profit. Expected profit minus normal profit is the formula of step 5. So expected profit answer how much we got? 1,10,000. No. So 1,10,000 minus normal profit. Normal profit value how much we got? 86,040. So 86,040 I am writing here. So 1,10,000 minus 1,10,000 minus 86,040, 23,960 we will get 23,960. Now the last step is goodwill. Step 6, goodwill. So what is the formula of goodwill? Super profit into purchase year. So super profit into purchase year. So super profit we got the answer 23,960 into purchase year. How many years they gave purchase year? Purchase year. So yeah, see, goodwill should be valued on the basis of 3 years on super profit. So goodwill should be calculated for how many years, ma? 3 years. So I am writing here 3. Now 23,960 into 3, 71,880. This is nothing but goodwill. Now I will explain this whole problem quickly. See, step 1 is what? Average profit. In the question they have not mentioned the average profit previous year values anywhere in the question. Okay, if at all they mention previous year profits, then with the help of those profits we need to estimate whether it is a simple average profit or weighted average profit, and we need to convert into the formula. Then we will find out what average profit, or else sometimes he will give average profit value directly in the question. But in this problem average profit information have been not given in the question. At that time what we need to do? We need to find out average profit on the basis of tax. So there is a formula for that. What is the formula? Profit is equal to profit before tax minus tax is equal to profit after tax. So here profit before tax is equal to profit after tax plus tax. So minus is going to be plus. So here profit after tax we need to assume as 50, and tax also we need to assume as 50. Why we are taking 50 only? Means in the question they gave here rate of income tax may be taken at 50, right? So the same 50 we are applying for profit after tax as well as tax. So here coming to the down, here 1,10,000 we took, and here also we took the same figure 1,10,000. This 1,10,000 from where we are getting? Means here provision for taxation value how much they gave? 1,10,000. No. So the same 1,10,000 we need to write both the sides. Okay, 1,10,000, 1,10,000. So add both of them, you will get the figure 2,20,000. This 2,20,000 is nothing but the average profit. For this I wrote here note as well. If average profit is not given in the question, at that time we need to find out average profit on tax. Okay, so this is the tax formula. Now coming to the step 2, capital employed. For this capital employed there is a pro forma, that is particulars and rupees. Okay, what is the formula for capital employed? Assets minus liabilities. First of all we need to write all the assets, and here do the assets, right? Assets A. Okay, then liabilities. After writing the liabilities we need to do the total, that is liabilities B. Now what we need to do? Capital employed A minus B. Okay, assets minus liabilities. Okay, then we will get the figure 7,72,000, from which we need to minus half of the current year profit. Actually this step we need to do only when in the question they will mention profit and loss account. If at all they have not given profit and loss account in the balance sheet, at that time we need to skip this step. Okay, but in the question they gave profit and loss account, then we need to do the extra step as well. So I wrote here less half of the current year profit. Okay, if you observe here instead of 52,000 I took 1,10,000. Okay, instead of 52,000 I took 1,10,000 here. Okay, why I took 1,10,000 means, see, there is a note for this. What is that note means? If average profit is done on tax, yes, we did average profit on what, ma? Tax, right? So if average profit is done on tax, then half of the current year profit also we need to take tax value, that is 1,10,000. Okay, so average profit we did on tax, no, at that time half of the current year profit also we need to take tax value only, profit value we should not take. Okay, so 1,10,000 into half, we will get 55,000. 7,72,000 minus 55,000, 7,17,000. We got the capital employed answer. Now normal profit is how much? Normal profit is how much? Now coming to normal profit, the formula is capital employed into normal rate of return divided by 100. So capital employed value, how much we got here? 7,17,000, no? So 7,17,000 into normal rate of return, percentage is given in the question. How much percentage it is? It is 12%. Okay, so 12% divided by 100. So 7,17,000 into 12 divided by 100, we will get 86,040 as answer of normal profit. Now coming to step 4, expected profit. Expected profit, average profit value is how much? 2,20,000, no? Average profit, how much we got the answer here? 2,20,000, no? The same 2,20,000 I took here, from which we need to minus remuneration, tax, investment and salaries, if at all it is given in the adjustment. Okay, remuneration is not given in the question, investment also not given in the question, and salaries also not given in the question, but tax is given in the adjustment. Okay, at that time how much tax is given in the adjustment? Rate of income tax may be taken at 50%. Here they mentioned percentage, value is not mentioned. At that time what we need to do means, here look in the balance sheet, provision for taxation, how much they gave the value? 1,10,000, no? The same 1,10,000 we need to take here. Okay, so 1 lakh, instead of percentage we are taking 1,10,000. 2,20,000 minus 1,10,000, 1,10,000 we will get the figure. Step 5, super profit. What is the formula for super profit? Expected profit minus normal profit. Expected profit value, how much we got? 1,10,000. 1,10,000 I took here, minus normal profit value is how much? 86,040. 86,040 minus both of these, you will get 23,960. Now the last step is goodwill. What is the formula of goodwill? Super profit into purchase year. Super profit answer is 23,960 into 3. Purchase year, how many years they gave goodwill? We need to calculate. Goodwill should be valued on the basis of 3 years, no? So I took here 3. 23,960 into 3, 71,880. So this is the second problem.